just no, it's not even a world. It's just like stage broadcast their LARPing tournament to the entire world. Like that's actually what it is. It's a LARPing tournament. Just like people dressing up and like
wow, everyone's back.
each other. And they come. Well, wait.
Arno,
Really, because, like,
can you get some pictures?
Like,
Yeah, just thank you.
no, there's no physical.
Oh yeah, just maybe use Sunny's phone. Yeah.
It's like they're going like take pictures. Yeah,
Yeah.
not to take video. There's not enough storage.
Okay, all right, let's get started. Cool. Wow, everyone's back. It's nice to see you all. Okay, so this is the last class of the course. Yeah, we're here. So we're gonna wrap it up, hopefully with something quasi-exciting for you. Okay, so we're gonna finish up a little bit of material. I'm gonna be talking about initial coin offerings, which is basically if you want to do anything in this space, do a startup, build technology, this is how you fund your project. This is like a new novel business model that's been enabled by cryptocurrency and blockchain technologies. Then we'll go through a course summary, just to kind of recap some of the things that we've learned this semester. Sunny's going to deliver an industry overview, and then in the blockchain-powered feature section, I'm going to go out on a limb and try to paint you guys a really creative picture of what a really utopian blockchain world would look like, entirely powered by blockchain, and what an extremely dystopian world would look like. And then we'll wrap it up. Okay, so initial coin offerings. Yeah, so before I go into ICOs, initial coin offerings, just give a little bit of background on what venture capital is. I mean, we're all in Silicon Valley, we all have a general sense, but it's basically you have a venture capital firm that takes in money from investors, usually say institutional investors, and then you have these VCs who are going to go out and try to find startups that they think are going to succeed and fund them with money. They invest into these companies and receive equity in return. And basically these venture capitalists will also do things like, due diligence. They'll have a lot of connections and experience. This is generally how the world of VC works. Yeah, so there's been a good amount invested in Bitcoin and blockchain startups. As of December 2016, there was 1.3 billion. It's probably a lot higher now. And what I'm really about is the initial coin offering. So what it is, it's basically a way to fund your open source project. You can think like, if I have an open source project, how is anyone ever going to fund it? So what you do is say, I want to build a new infrastructure in the blockchain space, like a database on the blockchain or something. What I'm going to do is I'm going to go out, write a white paper on my database, like prove that it's technically feasible. Then I'm going to put up a website, say like, oh, okay, you can buy tokens, you can buy shares of my technology. And these tokens are going to be distributed at this rate. You can buy using Bitcoin or Ether at this rate, and like be very transparent about your process. And basically, you put it up, tell the world about it, and people will send you Bitcoin and Ether to fund your project. So what you've essentially done is you've sold part of the tokens, which is kind of like equity in your technology, and in return you get a lot of capital to then spend on things like product development, marketing, etc. Yeah, so if you want to look at a list of ongoing ICOs, since it's so hot right now and you can make actually a lot of money investing in crypto, you can check out icolist.com. Okay, yeah, so ICOs are still a fairly novel concept. In this space, it's still heavily dominated by VC funding, but at the same time, VC funding is drying up because we're not getting many unicorn exits. I think a lot of VCs are realizing that, like, oh man, the projects that we funded don't actually have a business model, or that it's in general really hard to create some kind of profitable business model in blockchain because nothing's centralized. You can't like force people to go through your service and take a little bit of money off the top. So ICOs are fairly new, and we expect this to grow in the future. This is also a graphic from December 2016, kind of showing, okay, that venture capital still dominates ICOs. Like the largest funded projects are still in venture capital, but this might change soon. What was it? Gnosis recently did a crowd sale of their tokens, and I think from their token sale they were valued at $300 million. So ICOs are starting to take off, and this graphic, as of 4 months ago, is already out of date. Okay, so some of the drawbacks with ICOs is the legal uncertainty. In particular, these tokens that you're trading around, we're not sure if this should be considered as a security, like a stock or a bond, or if you should think of it like an access token, which gives you early access to some product or service. And it's tricky because some of these ICOs function exactly like securities. So for example, if you participated in the Ethereum ICO, you are basically just buying Ether, and Ether is like the currency in the ecosystem. Whereas like I know with some other ICOs, you buy their tokens so that you can participate and actually use their platform. So it's hard to just generalize across the whole set of ICOs, like classify them all as one or the other. Furthermore, it's not helpful that the Securities and Exchange Commission has not given very clear guidance. Interestingly, Coinbase, in this regulatory uncertainty, has published this report saying like, okay, if you're looking to do an ICO, you should probably have a very neat white paper. These are the things that you should watch out for in case the regulation comes out to, and you don't want to be classified as a security, which has a lot more burdens than just an access token. Yeah, so the true innovation of ICOs is that it lines the incentives of the developers and the investors. So if we take a look back at how open source is typically done, you have large foundations like the Mozilla Foundation and Apache Foundation basically heading these projects, and it's very heavily reliant on donations and volunteers. Because when you're building something that's open source, how are you going to convince anyone to go pay for that product? And this is why you can consider that these creators of this technology get a tiny share of the value that they actually create. So then they're incentivized to do things like make the technology proprietary, which will then cause users to be locked into this technology, which is just in general very suboptimal. So the innovation with ICO is that you can have these project team and the project developers monetize their technology directly just by basically selling shares in it, and it's all digital, it's all cryptographically bound, and now you can obtain capital upfront for something that hasn't even been built yet. Yeah, so the other benefit to this is it allows you to draw in developers to your ecosystem. So if you're running a platform like iOS or Android, one of your biggest challenges is to persuade developers to use that platform. Just take the example of Windows Mobile, which failed, because there's no apps on Windows Mobile. And this is because developers or companies are only going to build on that platform if they see some way that they can monetize that, right? But that usually means that there needs to be a large pre-existing customer base on that platform willing to buy your product. So if there's no one on Windows Mobile, you don't have the necessary network effects. So ICOs allow you to take in money in advance of this network effect before your platform has been built. And it's interesting because the people who then bought into your ICO are aligned with you. It is in their best interest to also help the ecosystem in whatever way, perhaps by developing applications on it, in general promoting that, promoting your ecosystem, and this contributes to the network effects you need for a ubiquitous platform. So the cool thing is you have now a way to monetize your work while keeping it completely open and free to the world. That's pretty cool. Yeah, it's also a double-edged sword though. Since right now there's not very much regulation, naturally you'll think, okay, yeah, there's scams. So for example, there's a cryptocurrency called OneCoin, which was basically just run on SQL servers. And some people put even 10,000 pounds into one coin, thinking that this was like, I'm investing into the future of money. Like, this is good stuff. The other drawback is that these ICOs often result in centralization because this technology is so niche, like so few people understand it, and so few people understand the need for it, that all these founders and early adopters get a very disproportionate amount of that money. So to just kind of like give you guys an example, I can't remember the exact, I don't know the exact numbers because I haven't checked, but I invested $60 in Ethereum's ICO back in 2014, and that's worth over $10,000 today. So it's just like, from just like pocket change, it's like, oh, I think this is cool. Like suddenly I have like $10,000. And that's what I'm also saying is like the benefit of investing in crypto. Huh? No, I haven't sold it. Yeah. Huh? Yeah. And as you can probably assume from my story, this attracts a lot of speculators trying to get rich quick. Question.
When you sell it, do they tax on that?
Oh yeah, if I sell it, then if I sell it to US dollars, then it'll be taxed as capital gains. Yeah.
Depends on how you sell it.
Well, yeah, that is true too. Yeah. Some other limitations of ICOs versus, say, traditional venture capital is when you raise money from VCs, these are professionals. Like, these are business-minded people who are going to question your assumptions. They're going to question your business model. They're going to force you to make these extremely detailed financial plans. And that process of creating those plans like actually helps helps your business succeed, because then it makes you scrutinize everything because they need to scrutinize everything. So with ICOs, there's no one to do that, no one to force that upon you. Like, these venture capitalists are regulated, so they're even like required to do this because they're doing the due diligence on behalf of their investors. Naturally, you can think that this due diligence is pretty much the primary area of concern for regulators. You don't want to have more scams and just pump and dump schemes, so to speak. With ICOs, you just kind of assume that the due diligence is done by the crowd itself. But let's be realistic here. Like, if you go to an ICO website, are you going to really take the hours it takes to read their extremely technical, complex white paper, read everything about their roadmap, like fully understand their technology, or are you there to just like make a few, $10,000 by investing 60 and just like, really, really emotional? Like, furthermore, do you trust that the crowd has the sound business fundamentals to effectively evaluate whether or not this company is going to be successful? Probably not. So that is also kind of a area of concern around these ICOs. Oh yeah, more drawbacks of ICOs. So the other value that venture capitalists bring is they can often leverage their experience or connections to help this startup. We call those VCs smart money because they don't just contribute money, they also contribute other things. This can happen where like the startup founders are really busy. They're just building their product. They might not be very well connected and they need help with recruiting. And then the VC is like, oh, I know a guy. I'll just bring this person in, like help bring in talent for your company. Another drawback of your ICO is that all the people who invest in your ICO tend to be a very narrow investor profile, because you're building something very highly technical, very niche, and you can imagine that the few people who understand that niche are like, oh, like Bitcoiners, and we know Bitcoiners like tend to be libertarian, like very technologist. We have a profile for what these people look like. So these people are just like bullish on your project, but they don't question your assumptions. They don't really challenge you to with alternative points of view. And the other drawback is kind of a logistical. Doing ICO can be a logistical nightmare because now you're suddenly not just introducing like a handful of venture capital firms. You're introducing hundreds or even thousands of individual retail investors, like non-professionals, and they're all demanding that you're gonna reach your roadmap on time and on budget. If you're a small team with like 5 people, this can be overwhelming to try to manage all these people. And if you don't do it well, it could turn it into a PR disaster that lasts well beyond the lifetime of this particular startup. Like, the founder might be cursed with this forever because he didn't properly manage his investor connections. So yeah, so Yeah. Okay. Any questions about ICOs? That was kind of fast. Okay. So now we're going to do a quick course summary. We're at the last lecture now. And as we go week by week, it's really easy to forget how much we've learned in the semester. So let's quickly breeze through some of the highlights of the semester, and this will jog your memory. Be like, man, I learned so much. Okay, so we started with Bitcoin history. We introduced Doge for the first time, trustless decentralized consensus. I'm sure you guys know what these words mean by now. We talked about Satoshi Nakamoto and how this isn't actually Satoshi Nakamoto. We had to revise our slides from $6 million pizza to $9 million pizza because Bitcoin blew up since last semester. And we went from this hippie Israeli cryptographer to the full power and legitimacy of J.P. Morgan Chase. In Bitcoin Protocol and Consensus, we introduced the analogy of UTXOs, how you're always spinning from some previous output. We did a 30-slide build-up of, Alice sends to Bob, oh no, like double spending, and like Eve is like clever or whatever. So like how Bitcoin achieves consensus. And in our wallets and cryptography lecture, we covered wallets. We covered things like BIP32, hierarchical deterministic wallets. We formally covered what hash functions are, fixed size bit string like hash code, and elliptic curves of the short Weierstrass form. I love Philip and his technical buzzwords. All right, in Bitcoin and mechanics and optimizations, we formally covered what a double spend is, being able to catch up after a number of blocks. We looked at what a transaction looks like basically on the wire. We talked about how there's two nonces in this Merkle tree hash chain data structure. Then we went through this extremely confusing example of Bitcoin scripting with a pub key, like script sig, like script pub key, etc. And then we also talked about how you can basically cut the amount of data storage by 1,000 using light node SPV. In cryptocurrency mining, we talked about how it's kind of like throwing darts at a dartboard. Went through the different evolution of hardware used to mine these hashes. Went through this confusing diagram of what merge mining is, and then talked about some of the cool things you can do with mining, like proof of useful work, proof of storage, and then we blasted you with memes, as usual. And then in our game theory network attacks, we talked about what mining pools are, why we need them for the reduced variance. We talked about cannibalizing pools, how it's more profitable to attack other pools than it is to mine honestly. Blacklisting via feather forking. We introduced Chairman Mao and good old Garrett Johnson and talked about how Mao can wreck Johnson. And Philip talked about time jacking, and then we finally proved that it is profitable to 51% attack Bitcoin. Yeah, not a really good lecture for Bitcoin. Then in our Ethereum smart contract lecture, we first covered like, okay, what is a smart contract? Why is this like the technology of the future? We went into some of the lower levels, like how do you maintain this highly complex state? It's because we use the EVM at the low level and just need to secure the EVM. Philip shared his minimum viable token. And we talked about some cool use cases like decentralized prediction markets like Gnosis, I was just mentioned, launched this weekend. And then talked about decentralized autonomous organizations and the DAO, which was hacked and basically destroyed $1 billion in value of Ethereum. And then we went through this slide, which is the essential properties of blockchain killer apps, where every use case that we think of needs to be better than its centralized solution. In alternative consensus enterprise blockchain, we went through the formal properties of a distributed system, consensus algorithm, safety, liveness, and consistency. We introduced what the Byzantine generals problem is, and talked about proof of stake and the nothing at stake problem. Then we went through a lot of the really complex technical consensus things like practical Byzantine fault tolerance, some Paxos, and some other ledger-based consensus protocols, as well as federated consensus protocols. Then we had a quick note on Hyperledger, which is the enterprise blockchain solution. In scaling Bitcoin, we talked about the hard block size increase, hard fork, blah, blah, blah. Talked about Bitcoin Unlimited and segregated witness, how there's a huge debate. There's been so much juicy news recently There was recently a backdoor found in the chips of the CEO of who supports Bitcoin Unlimited, and he basically has the power to shut down 70% of Bitcoin's hash power at will. And yeah, anyways, you can read about that later. We talked about Schnorr multi-signatures, which allows you to combine a bunch of signatures into what looks like one signature. How sidechains can provide us horizontal scaling in blockchain and payment channels on the Lightning Network. And then we also airdropped you with some Bitcoin, after some technical difficulties. Regulation and anti-money laundering. Nadir talked about some of these laws and some of the global perspectives on blockchain and cryptocurrencies. I talked about how your cashier can blackmail you if there's a lack of anonymity and you happen to be Satoshi Nakamoto, steal your $60 million, way more than that, like billions of dollars. We talked about how you can cluster these addresses together to identify them to the same entity, and then taint analysis and some of the naive mixing schemes such as altcoin exchange mixing and centralized mixing. Then we went into the really technical stuff. So we talked about CoinJoin, which is famously proposed by Greg Maxwell, building block for other things. CoinShuffle, which uses a layered encryption. CoinParty, which is plausibly deniable. CoinSwap, which is trustless. And Tumblebit, which is trustless and the only state-of-the-art plausible Bitcoin mixer. And then we also introduced our Swinger protocol, as we like to call it, as well as Monero and Zcash. Okay, and then in our last lecture, as you recall, we talked about some cool things like Filecoin, IPFS, how you can store data, a lot of data on the blockchain, how decentralized reputation doesn't really work because it's not Sybil resistant. Then we talked about Lord Voldemort's creation, Mimblewimble, and some cool things you can do with Lightning Network, like onion routing. And we talked about how you can build in governance into your blockchain through a blockchain like Tezos, and as well as prediction market-based governance, vote values, bet beliefs through Futarchy. And then in our conclusions, we had a course summary. Just kidding. All right. So so I hope that kind of illustrates how many different things we learned this semester. It's just kind of a whirlwind. And the unfortunate thing about this space is that there's so much material that we don't have any time to go back and review it. But we're always happy to discuss. You can join our Slack and talk about this technology with other people. Our next semester's offering of the decal is probably going to have something like a discussion section, so that we can so that the information actually sticks. Because we recognize that as you're going through this course, if you miss one thing, you're just completely lost. Yeah. Okay. So.
So I'll go ahead and be giving a sort of blockchain state of the union, just an update on, now you guys don't get to hear our weekly updates about blockchain. So just an idea of where the industry is right now and what are some of the big things that have been happening over the last few months and weeks and what we can be looking forward towards in the future. So first off, in the world of Bitcoin, like Max said, the scalability debate is as ever ongoing, but getting more and more political as time goes on. Bitcoin Unlimited and SegWit are just this week. Bitcoin Unlimited hit 50% signaling, which means it essentially has close to a majority now, while SegWit is still floundering at around 35%. But I haven't actually looked at what the new statistics are after the ant bleed bug was found. Ant bleed is basically what Max was talking about, how there's a major vulnerability that allows the CEO of basically the largest mining rig manufacturer to shut down all mining rigs, 70% of mining rigs if he wanted to at any given moment. Also, where is Bitcoin in the larger world is there's some places that are really starting to adopt it and embrace Bitcoin. Japan a few months ago started accepting Bitcoin as a legal payment method, and at the same time there's some places that are going in the opposite direction. A few months ago, Hawaii basically put in new regulation that essentially stopped Coinbase from operating in Hawaii. And as we've as it's common practice, is that when Coinbase goes down, Bitcoin usage in a certain place also goes down because Coinbase is still a very major player. One place in the world that we're all very much looking forward to is what's going on in China. China is very interested in Bitcoin and blockchain. And Max was actually just at a talk there recently, and maybe he can explain a little bit more.
Oh, I was just gonna say, like, because the Chinese government is, all powerful and wants to control everything, they want to be the world leader in blockchain, and so that they can influence all the standards in their favor. So we went there, taught some workshops to these Chinese corporates, and apparently they were tasked with, like, oh, we're in the IT industry, like, come up with 10 blockchain use cases, and blockchain at Berkeley is expanding in China. That's funny. Maybe we'll have to change our name.
And then also Max, Ronan, and I, we recently had a talk with Andreas Antonopoulos, who, if you guys know, the Mastering Bitcoin textbook that we use in this class, he's the author of that textbook. And we got a lot of his views, and basically what he told us was he's really pushing for Bitcoin's adoption in a lot of third world countries, especially in Africa, Southeast Asia, and Latin America, because, for example, in Africa, over 50% of the population doesn't have access to banking or financial systems. And also in a lot of countries, unlike in the US where we have a relatively stable government, a lot of places don't have governments that are reliable and are at times even malicious at times. So Bitcoin really could provide a new basis for financial systems and to these a lot of third world countries. Off of Bitcoin, we have Litecoin, which is basically Bitcoin's. It's very similar to Bitcoin, except it uses a protocol called Script. But basically, just this week, Litecoin hit the required percentage of signaling required to activate SegWit. And so in the next week or so, it will be activating SegWit, and we see the price surge because of this anticipation towards this activation. And what we really see, a lot of people in the industry are talking about how Litecoin is essentially going to become almost a testing ground for Bitcoin. So now that SegWit's getting activated, maybe we can try testing out Lightning Network and try it on Litecoin, make sure all the technicals work out, make sure all the economic situations work out, and then if it is a success, then things can port over to Bitcoin. So Litecoin is something you could really look out for in the next few weeks. And then also some other crazy stuff that's happening in the market is we like to think that like the days of like Mount Gox are behind us, where we have these like sketchy situations. But this is something that just happened this week. There's a cryptocurrency called Tether, whose job is basically they wanted to provide a cryptocurrency that's pegged to the US dollar. So 1 Tether equals 1 US dollar. But if you look at the price, you can kind of see the problem there. That's 92 cents, not $1. And they claim it's because of a situation with Taiwanese banks not allowing people to withdraw money and do international wire transfers. But just a few weeks ago, it was found that through an audit that they were actually missing $1 million that they claimed to have. And so this is just something, if you are engaging in like cryptocurrency speculation or investing, you have to be very wary of what you're doing. There are still a lot of sketchy players in the entire field. Meanwhile, over to Ethereum. Ethereum is still working on Casper. Casper is their implementation of proof of stake. It was originally expected that they'd hopefully be able to switch into that by mid-2017, but it looks like that timeline's being pushed down the road a little bit right now. There's no official timeline yet, but it's still something that's in the process. Meanwhile, they're working on a bunch of other projects as well. For example, one of them is Swarm, which is basically a way to standardize the storage system that's used in Ethereum development. And this is just one example of the many things that the Ethereum organization is trying to do right now. And overall in the market, there's a lot of sentiment about like a lot of people are switching away from Bitcoin and towards Ethereum. I personally am much of a Ethereum maximalist, where like I think that Bitcoin is old news. I'd say it's almost 8-9 years old. It's almost as old as like the smartphone, and they're really just like It is like smartphone 2007, Bitcoin 2008, and so it's like Ethereum's really the one who, at least for now, is much less bogged down with politics, and also they tend to be much more progressive with their ideas, willing to try new things like proof of stake. They were the first ones to try the Ghost protocol. So, and then we just earlier this week we had a storage come over, and they're a decentralized storage platform, and they basically were giving a talk about why they are making the switch from Counterparty, which is basically a way to build on top of Bitcoin, and they're switching to Ethereum. And really just why, as Max just mentioned, the Bitcoin scripting language is crazy. It's like trying to program assembly on top of this like weird compiler that no one knows how it works. While Ethereum is like you can use nice, easy to use programming languages like Solidity, easy to use. But and then so we see like a lot of big companies that are trying to like implement their own tokens, like Digix, Golem, Library. These guys are everyone's sort of starting to build on top of Ethereum, and this just seems to be a general trend we're seeing in the industry. And just a random thing on the other side of Ethereum, Classic is for some reason rising. It's even more than it was when I posted this on Wednesday. I have no clue why. But on our talk with Andreas Antonopoulos, he actually gave us a really interesting insight into Ethereum Classic and his thoughts on the DAO hack. He essentially told us that, okay, let's think about Silk Road, right? Silk Road used Bitcoin to like do its daily interactions, right? But the next version of Silk Road, I don't mean like actual literal Silk Road 2.0 because that already exists, but like whatever this next really, this like black market-y kind of thing is not just going to be using Ethereum, it's literally going to be built on Ethereum, right? And the idea is what happens when the government goes and knocks on Vitalik's door and says, hey, roll that back. And Vitalik's like, no, what? I can't do that. It's immutable. And they'll be like, wait, you did it for the DAO hack. Do it now. And then, like, that, essentially it's a very slippery slope where, like, the principle of immutability has been breached, and once you do it once, who's to stop you from doing it again? And we kind of just got rid of the whole functionality of Ethereum, which is to write unstoppable code. Because if the people can decide to stop that code, doesn't really have much value. So this is why Antonopoulos basically suggested us to long Ethereum Classic. Also, another thing Ethereum is working on is their Enterprise Ethereum Alliance, which is basically a coalition of many companies, Fortune 500, big banks, who are trying to use Ethereum as their development platform for implementing blockchain into their real-life business solutions. And the opposer to Ethereum Alliance is Hyperledger, which is really, I guess, much bigger right now and really leading the industry when it comes to enterprise Ethereum. And so we do see that industry is starting to take notice. Like even companies that are like traditionally based around like the entire business model is about centralization, like Spotify, we want to get all the music on our server so that we can distribute it to the world. Even they're starting to become a little bit more interested in blockchain. They recently bought this just this week bought this startup called MediaChain. Some other big companies that are just names to know in the industry is Digix. They're basically a company that's like trying to tokenize gold and create a stable cryptocurrency. We had them come talk to us as well and got some really great insights from them. And then, like Max was saying, ICO insanity right now. Gnosis has got a $300 million valuation because they ended up selling. They had a very complicated ICO model, but they basically ended up selling less than 50% of their coins and basically gave themselves a crazy high valuation, which is the highest of any blockchain startup out there right now. And on the opposite side, we do have a lot of ICOs that are maybe not that great. There's a company called Matchpool who last week basically raised, what they are is Tinder on the blockchain. Like, whatever that means. But they ended up raising over $5.4 million in their ICO. So this is another thing, like when I was saying, if you're investing in ICOs, really don't just go with the crowd, do some reading and like actually understanding what's going on. And then just some other things that are like really big, more peripherally related to the industry, but IPFS is coming. It's there's a lot of development being going on there, and there's a lot of interesting applications for like combining IPFS and blockchain technologies. One really key thing I really enjoyed while learning about IPFS was it had this ideology of like let's the entire thing isn't based on blockchain. IPFS is basically redesigning the internet, right? And it's a very large stack, and they use blockchain in some parts. Like you see, they bring some technologies from Bitcoin, from Blockstack, but then they also use a lot of older technologies as well, such as like BitTorrent, ideas of Git, and it's like if you're ever like trying to create blockchain applications, don't think like, oh, how can I put everything on the blockchain? Think more, how can blockchain be one part of my overall stack solution? And I really like this slide that Howard created just for that reason. And there's also a lot of thought being done on, hey, what if we just fundamentally rethink the blockchain altogether? The left is what a traditional blockchain is, right? It's just a bunch of linked lists with Merkle trees in each node. But what if we like completely rethought? Like maybe we don't need this linked list structure. So there's a company called IOTA where they're basically creating a new blockchain that's designed for microtransactions, but instead of using a linked list, they use something called a directed acyclical graph. And there's a lot of really interesting stuff going on with IOTA, and there's a white paper circle on our YouTube channel if you're interested in checking that out. And finally, one last big thing that definitely we should be keeping an eye on is trusted execution environments. These are basically specialized parts in CPUs that run code in a way that's like completely untouchable by the rest of the CPU, and it's completely like auditable code. And this sounds pretty similar to another technology we've been talking about a lot, smart contract. So Intel, most newer laptops do ship with Intel's SGX platform, and so this could provide some people say it's like somewhat of a competition, like, oh, our like SGX is going to completely replace the need for smart contracts and destroy the blockchain. I think there's a lot of room for like, how can we use these two technologies together? Could we perhaps use Intel trusted execution environments for the execution of code, but then use blockchain for the transmission of information? These are a lot of really interesting ongoing research topics. And so now, if any of this sounds interesting, how can you get involved? I mean, one thing is the blockchain industry really needs good talent. These are just some articles I grabbed the headlines of, and everyone's looking for people who are knowledgeable. Yeah. And there are a lot of places you can work, whether it's large companies, small companies, blockchain startups. So you want to start the next Silk Road because now you have so much Bitcoin knowledge. You're not going to get caught like Ross Ulbricht did.
Yeah, so the state of the industry right now is like, if you just go to a company and take the 90 minutes to read their white paper or whatever and like show your interest and passion, like then they're going to be very interested in you, because as you can probably tell, this is a very niche space with a very high barrier of entry from a knowledge standpoint, and everyone's hurting for like blockchain developers. There's infinite opportunity. Yeah.
These are just some places, startups and companies that some are blockchain at Berkeley's members and alumni are either interning at or working at. Like we have people at a lot of the major blockchain companies, and honestly, if you if you can show that you have the blockchain knowledge, these guys are ready to hire you right away. And a little bit about our org. I mean, we were Bitcoin Association just a year ago, and as you guys know, we've done our whole rebranding to Blockchain at Berkeley, and we are growing very quickly. This was a picture from one of our meetings a year ago. This is us working on the DMix project, but yeah, as you can see, it's pretty small. And then from next to the following semester, which was last semester, and then now for this semester, where we have over 100 people, and so we're very much growing, and there's a lot of room for people to get involved, however in any way possible. We're looking for people to help teach the decal next year if you want to get involved with education or teach blockchain workshops. Also, like educational consulting, where we go to companies and teach them workshops in order for fees. We have R&D, which we're working on more academic style projects and writing papers, and consulting, where we're going to major companies such as Airbus or Exxon and like helping them see how we can implement blockchain in their systems. And now Max will talk a little bit about a blockchain-powered future.
So before I move on to that, a little bit more about like the opportunities in this space. Say like you want to go into finance and become an expert on finance. That's going to take you 20 years because like the people who are experts have been in the industry for over 20 years. But like this industry, if you have 3 or 4 years of experience, like you're there, you're at the edge, and it only takes about like 3 to 5 months of just like going and like digging into all the materials, learning as much as you can to become the smartest person in a room on something blockchain technology. And if furthermore, if you want to focus on something very specific, like how me and Philip focused on privacy and anonymization, then you become the expert among the blockchain industry. Just because like there's so much material in the space that like it's damn near impossible to catch up. Earlier this weekend, someone was telling me like, yeah, I decided I'm going to only read about governance in blockchain solutions. That's going to be my niche because if I try to read about any more than that, then I won't be able to keep up just because the industry is moving so quickly. So there's a lot going on. Yeah, I hope that like interests you. Okay, so I'm going to pull up some notes real quick.
I'll be linking a list on the Piazza post, like a mailing list. Just sign up on it, and we'll let you know about certification.
Okay, so now I'm going to paint 2 visions of blockchain. We're going to start with a very utopian vision. So just imagine, like the world is heaven right now. Okay, so you leave the apartment where you spent the night, and as you leave, sensors detect your departure, and Slockit's smart contract pays back your security deposit. You order a coffee from Pete's on your smartphone, and as you pull up a payment, a notification pops up. It's a reminder to extend your payment channel with a global lightning network. You're a little fuzzy on the details because the last time you had to touch your payment channels was 10 years ago, but since it's all secure and doesn't cost you any money anyway, you decide to extend your payment channel for another 20 years. You call your car, but it's not really yours. It's plugged into an autonomous, ad hoc swarm of vehicles readily available for use. Accidents are rare, but when they do happen, the insurance agency analyzes video footage via machine-learned trained bot and automatically gives the victim in the accident the appropriate payment. Except it's not actually an insurance agency. It's a smart contract that pools together the funds of a multitude of owners and charges people the exact expected value of car insurance, taking no profit. The near exact probability of accidents is known because every accident that has ever happened is recorded on the blockchain. Work. You head off to your company headquarters to work for the day, except your work isn't really work. It's all voluntary because the blockchain ensures a universal basic income for everyone. And you're an engineer and researcher by trade, primarily because you want to help push the boundaries of human knowledge. Your company isn't really a company either. It's a decentralized autonomous organization consisting of individuals from around the world who voluntarily signed up, receive compensation and pay raises based off of the quantity and quality of their research findings as determined by a worldwide Oracle network, and who can exit their contract at any time. Your company itself receives revenue over time as measured by the net benefit to society your research brings. All right. Government. For the few functions of society left that still require a government, it's run by a democratic frutarchy where the markets decide which policies should be implemented, completely removing the possibility of corrupt politicians who know little to nothing about the fields they write legislation for. All right, so that was the utopian world. Let's talk about the dystopian world. All right, 1 second, my phone's about to die. All right, okay, so in this world, everything is on the blockchain, including a global reputation score for everyone on the planet. Someone is nice to you, you can upvote their reputation. If they're a dick to you, you can downvote them, encouraging a society full of kind and compassionate people like yourself. Unfortunately, Evil Eve is jealous of the ease at which you can land internships at Google, Palantir, and Coinbase due to your high reputation score. Eve realizes that decentralized reputation isn't Sybil resistant and launches a slander attack on you. For the rest of your life, everyone you ever come in contact with is immediately notified that you're a sex offender and you fail to secure a job for the rest of your life. Hold on. Technical problem. Okay. At least you've earned a lot of money from those internships, right? Wait, sorry. Can you take a picture of this? My phone is literally at 1%. Oh, there it goes. There it goes. Hold on, I'm so sorry, but okay, I'll read you the rest from the notes. Yeah, my phone just died on during lecture, so yeah. Okay, maybe I should unplug this.